Every trader knows the sting of a red trade. But what separates survivors from those who blow accounts isn't the loss itself, it's what happens next. The most dangerous trade is always the one right after a loss. In prop trading, most failures don't happen because the edge disappears. They happen because re-entry is emotional, impulsive, and undisciplined. After a loss, your brain is wired for revenge. Dopamine spikes. Logic fades. Hands move faster than thought. That's how one mistake snowballs into tilt, rule violations, and lost funded accounts. TradeRx Markets was built for this exact moment. It doesn't just find trades, it decides when not to trade. Planning re-entry after a loss is one of the most overlooked skills in prop trading, and one of the most essential. The first trade after a loss feels urgent, but that urgency is often deception. Most traders increase size after losing. They jump into trades earlier or later than they should. They start taking marginal setups. Risk plans get thrown out. This isn't lack of discipline. It's human biology. Losses trigger the fight or flight center of the brain. The urge to recover quickly becomes overwhelming. In the real world, this looks like a trader taking a $400 loss in a choppy ES market, then doubling size and blowing the account. Or a NASDAQ trader who ignores a news restriction out of frustration and violates firm rules within minutes. Or a gold futures trader stacking losses, chasing breakouts in a dead session. The loss wasn't the problem. The reaction to it was, TradeRx Markets doesn't react emotionally. It evaluates context, recalculates probabilities, and waits for the right time to re-engage. After a loss, it triggers a cooldown, forcing a time buffer so no impulsive trades can be placed. It reviews the market environment and the trade itself. Was the loss just variance? Or did the market structure change? It then reduces risk. Even when a new setup appears, re-entry is done with smaller size. TradeRx steps in to enforce all compliance, daily loss limits, trailing drawdown buffers, and news event timing. If any rule is at risk, the trade is blocked. And before re-entry, TradeRx Markets looks for signs of emotional drift. If it detects impulsive behavior, journaling is required. No entry without reflection. This turns the chaos of re-entry into a structured professional cycle. The moment a loss occurs, trading stops. TradeRx locks the keyboard. The trade is logged. Screenshots, rationale, exit conditions. TradeRx Markets evaluates what went wrong and why. Then, and only then, does it allow re-engagement with reduced size. If the next trade stabilizes, size can scale gradually. In ES, a trader hits a $600 loss in pre-market chop. TradeRx Markets tags the session as low probability. TradeRx enforces a 30-minute cooldown. Later that morning, a clean VDU app reversal is approved. Reduced size, controlled entry. Emotional spiral avoided. In NQ, a trader loses after FOMC. Instead of tilt trading, bots enforce a 60-minute news buffer. The next trade earns $500 at reduced size. Evaluation saved. In GC, 3 failed breakouts trigger a $400 loss. TradeRx Markets bans breakout setups temporarily and shifts to mean reversion. The next trade wins $350. What manual traders see as chaos, TradeRx Markets turns into structure. Most traders spiral because they can't separate variance from error. They chase wins to fix losses. They forget the rules when emotions rise. But when TradeRx Markets and TradeRx run the re-entry process, everything changes. Premature trades are blocked. Journaling replaces knee-jerk action. Size stays small until stability returns. Compliance stays intact. Accounts stay protected. And so does the trader's mindset. Professional traders go even further. After a loss in one account, the bots shift focus to another, avoiding tunnel vision. Losses are categorized: variance, structure breakdown, or execution error. TradeRx Markets waits for optimal windows before re-entry, like the New York Open or post-news stabilizations. Scaling only resumes after 2 clean trades. Emotion never drives the throttle. Want to re-enter immediately after a loss? You can. But TradeRx will log it, and your journal will hold you accountable. Size is reduced after losses unless the loss was within expected variance. You can customize your cooldown times based on how you handle tilt. And if you stack multiple small losses, bots enforce a full session lockout. In funded accounts, this logic is even more critical. Break a daily loss rule, and the account is gone. Losses are inevitable. Emotional reactions don't have to be. Most traders don't fail because of their strategy. They fail because they collapse under pressure. Derkio Markets and TradeRx create a re-entry process that removes that pressure step by step. You stop, you log, you recalibrate, and you re-enter with discipline. Instead of gambling to make it back, you start treating recovery like a skill. Losses become checkpoints, not threats. Ready to stop letting losses control your trading career? Discover how Dr. Markets and TradeRx turn re-entry into a disciplined, protected system. Learn more at Technests AI. Don't just trade again. Trade right. Thank you for watching.